Hi everyone, my name is Ashley Kerr, co-host of the Real Estate Rookie podcast, and today is another video of Rookie Resource where you get a free downloadable to take home with you. So you can go to biggerpockets.com/rookie resource and you can see the other templates and checklists we have created. You can also go back and check out our other YouTube videos that are labeled Rookie Resource. Today we are going to be talking about market analysis. So last video, we talked a little bit about how to actually find your market and what to look for when deciding on what you need in your market to actually pick one. Now we're gonna break it down even further as to what are the pieces of data, the statistics, and the things you want to know when analyzing a market so that you can compare markets. And as we talk about markets, we're really going to want to niche down into neighborhoods. So you could say the city of Buffalo, but once you determine that you want to invest in Buffalo, you're going to have to break it down by neighborhoods to really determine what is the best area for you to invest based on your strategy and based on your why, your goals for investing in real estate. I brought on a guest today. First time bringing a guest onto the Rookie Resource. So I brought on my contractor who is also an investor, flipper, owns a bunch of long-term rentals and soon his first short-term rental.
That's right.
This is Riley McFarland. Hello, Riley, and welcome.
Thank you for having me.
So I brought Riley on because he has some experience from going from a really small rural town to investing into the city of Buffalo and the north towns and really finding different markets by neighborhood. So I'm gonna talk to Riley about different things that he has done to analyze a market. So what are some of the first things you look at when deciding where to invest?
First of all, affordability, something that works within my budget. But I also look at different neighborhoods and I'll see what they're doing, how they're operating, if they're an appreciating market, if they're a hot market, how long the properties are sitting on like a listing. Sometimes you'll see they'll sit there for 60, 90 days.
Yeah.
Sometimes you'll see them three days and there's a pending offer.
Yeah, especially if you're doing a flip. That's a great indicator is to looking at days on market.
Yep, flips, and then also rental properties. So if there's a multi-unit that goes up for sale and it's only on, listed for 2 days and it's gone, that means other investors are looking at that neighborhood, that market, and they're like, I want to get this.
Yeah, that's a great point. Yeah.
So, it's such a competitive environment that if you see a rental property that's sitting there for months, there's probably 100 other investors that have looked at it and said no. So that's what I look for.
We're going to first start talking about like jobs, unemployment, and kind of looking at the people that actually live in these areas and if there's people coming into the area or not, or if there's people leaving. And take this with a grain of salt because you could look at the city of Buffalo data and see that, it looks like overall people are leaving. There's not an increase in people coming into the Buffalo market. But if you break it down in neighborhood, you could see that actually these people are moving out of the city and maybe into a suburb, or that there's a specific neighborhood or area where people are going.
Yep.
So Riley just recently did a flip, and his biggest complaint about this flip when he did showings was what?
The school district.
And it was in the town, Williamsville.
That's a suburb, very, very popular, affluent suburb. I was just excited to buy the place. Yeah. I found out later that there's literally like 5 blocks of this one neighborhood that's in a different school district. So that was like kind of a kick in the pants. I was like, I didn't realize that. And that was, 60 something people came through our open house, and that was the number one complaint. Not the house itself, not the neighborhood itself, the school district.
So yeah, it's important to not only know your neighborhood that you're investing in, but what school district that property is or what school district you want that property to be in too. And there are some advantages of being able to live in Williamsville, but be in a different school district. Maybe if you don't have kids or you don't care about the school as much, but like the property taxes are probably cheaper for that other school than compared. So like that is one advantage. You get to be in that town, but have the lower property taxes. That can go vice versa too. So some other things to look at when you're identifying the person that's going to rent your property or buy your property as to, besides just the growth, are people moving into there? Are the job industries? Is there just one factory or one healthcare facility, and that's where the majority of people work, you want to find at least 2 to 3 or more different major job industries that support, the economy there, bringing jobs in for different people. Subscribe to, like we have here, Buffalo Business First newspaper, okay? You can subscribe online. You don't have to actually get a physical newspaper like I do, but you can look and see what's the new development happening in the area and follow and be like, wow, okay, Amazon is going to be building this huge facility. They're going to be creating 5,000 jobs, whatever that may be, and kind of follow those trends and do your research as to what's coming into that area, what's going to be bringing jobs, and then what are some already stabilized jobs in that area too.
Yeah, and a thing I would look for as well, like the flip I did, that sold at a pretty substantial sale price, that's going to sell to a professional, someone who can afford that mortgage payment. Versus in different neighborhoods, you might be selling to, instead of white collar, you might be selling to blue collar. So is there blue collar jobs in that neighborhood, or is it like easily accessible? I also look at like major highways in and out, how easy it is to get around the city. Buffalo is pretty good at that. Like, I don't think much more is than like 25 minutes drive, but the one neighborhood I'm in right now, heavily invested in, there is a lot of blue collar jobs. There's a lot of factories. There's a lot of like construction industry, but it's also easily accessible to like 3 main highways. So if they're in that neighborhood and they have to drive, it's not a big deal for them. So the commute, that's a big thing. Yeah. There are a couple suburbs around Buffalo that are kind of out there. So now instead of a 20-minute commute, you're talking 45 minutes to an hour. Yeah. So those are things you want to look at. I think something that people don't or haven't really thought of is, like in your case, you're in Springville, which is like an hour from the city. Yeah. But now, because of the post-COVID thing, a lot of people can work remotely too. So a lot of these more rural areas are actually getting a lot more investment because 1 or maybe 2 of the people owning the house can work remotely. So the commute is not that big of a deal to them.
Or now it's only one person that has a commute instead of 2.
Yeah, and they can get maybe a bigger house, more land. They can be, outside of the city, the hustle and bustle. And that's just something you want to look for when you're looking at potential investment properties.
Yeah, great point right there as to where do people want to live. But also you mentioned as to can people afford it, the affordability. Yeah. So the actual job pool, what are they making? What's the median income for that area? And then what's the price point of the houses? So if the houses are X amount, but their median income is very, very low compared to that dollar amount, then that's probably not the best area because not a lot of people can actually afford to buy homes. Then you're going to want to look at the percentage of renters in that area compared to the percentage of home buyers. So if you're buying a rental property, and this is a lot of people rent there, that's great. But if you're going to flip a house there, the majority of renters, that's really going to limit who's going to be the end buyer for your flip house too.
Yeah, and another important thing to note is actually the city of Buffalo itself. We're an industrial revolution city, so there's entire neighborhoods that are like multifamily, right? So, I mean, if you buy a single family home in a neighborhood that's mostly majority multifamily and renters, that's probably not going to be a highly desirable flip for a single family. You probably still make your money back on someone who doesn't want a duplex versus a single family, but it is something that you want to take note of when you're looking for potential properties. Yeah.
So besides the demographics, the comps, the pricing, and the jobs, the other thing you want to pay attention to is to also, based on your strategy, is what's drawing people to the area besides jobs. Is there attraction? So especially if you're doing a short-term rental, what's going to bring people to this area to want to stay in the short-term rental apartment or property or whatever you have. So that's another big thing. And then I think kind of these little specialty items that don't seem like a huge deal, utilities and the maintenance on the property, the construction of the property, and the age of the home. So actually looking at the physical properties in this area. So in Buffalo, a lot of the houses have vinyl siding, and that's pretty standard, right?
Yep.
I went to Seattle, Washington before, and the person that invests there pointed at a house and said, "Ick, they have vinyl siding. That's so gaudy.
Yeah.
And they don't have that there. That is not a common thing. So I think like understanding what construction material is, that can also help you build your scope of work too. So like if you're looking at a property in a market and every other house has hardy backer board and then this one house has vinyl siding, you're most likely, if you want to flip that house, you're going to have to replace all of that to be able to, and that's going to add a lot to your rehab budget.
Right. Yeah. You have to meet the market that you're going into. So you don't want to be below the market on any sort of finishes.
Yeah.
Same like what you said with the vinyl siding. There are some neighborhoods in Buffalo that if you drive into them, they look identical. Like every single house looks the exact same. So that could be like, if you do something different that's nicer, that could be a draw for a potential buyer. You know, like you said, like you do a nicer siding or better windows or something that's going to make it stand out from the rest of the neighborhood. People are going to be like, well, that's really nice. That could be an affordable thing if you're doing a flip. That would really add value and desirability for the house.
Then the last thing is the utilities, as to what utilities are actually to the property. So if you're doing a rental and it has a wood burning stove inside, your insurance company is not going to like that, and that is going to increase your premiums. Same if there's a trampoline or a pool on the premise and you have renters in place. So insurance can play a large part too. And then for the utilities, like around here, there's electric heat, there's natural gas heat, and there's propane heat. Is there any other ones I'm missing?
Those are the main ones.
Yeah, those are the main three. So if you look at those different things, if you're in an area that has a really high cost of electric and the heat is electric, that may deter people from wanting to live in that area. But if you have natural gas, that could be more expensive too to actually heat your home than to get electric. Some of the villages around here have their own electric service where it's usually very cheap and affordable electric. So people prefer to have electric heat in their homes in these areas. And then a propane tank, you got to get a propane tank filled. So, you know, if you have a rental, like, is that your responsibility to make sure it gets filled? Are you going to put that onto your tenants? If you're looking to buy small multifamily, are the utilities separately metered? Is it all on one meter? So
that's a big one. Yeah, that's one of the things that I always look at when it's a multifamily is if you're paying for your tenant's heat. Because, I mean, if you're not paying for your own heat and you're a tenant, you might just leave your windows open in the middle of winter and then that cost goes on to the landlord. I've actually bought multifamilies that weren't separately metered, and I went ahead and did the work to separate them. So then the utilities go on to the tenants. So that's something you want to look for as well, because you said the cost of utilities can, you know, drastically change your profit margin.
And I think just with the market analysis is understanding what's standard in your area, what's most efficient that a home buyer is going to want to take care of, looking at those different things in your area along with the insurance. What is the standard insurance premium? Is there something about that area where the insurance cost is actually higher than the next neighborhood over because it's in a flood zone, or you need hurricane insurance? You know, there's so many different things that can affect it. I once bought a rental property that was considered a row house because it was so close to another house. And in that market, there was no other houses considered row houses at all. And I had done my insurance research to understand what was common for a duplex. My insurance was so much higher just because that duplex was right next, so close to another property right next to it.
I actually have a story about utilities as well. It was a house, it was a live-in flip in Hamburg that I lived in pre-COVID. And one of the reasons I got it for so cheap was because it was built in the 70s and there was no utilities at the road. So they were actually heating their house with a combination of wood burning fireplace and heating oil.
Oh my God.
It was like an actual oil tank in the basement that you have to fill. And that's, if anyone knows.
What's the environmental study like for that?
I don't know, but it's not good. And it's expensive. So when I bought the house, the previous homeowners were like the original owners. They had printed out like, oh, this is who we get our heating oil from. This is how much it is per year. And it was like $5,000
oh my God.
for one winter of heating oil. And I was like, this is ridiculous.
And that may be common in other areas, but in this market, that is not common. And that's like the point we want to drive home is like, know what your competitors are going. Because if somebody found a similar type house that had natural gas hooked up to it, they would go for that other house because it would be so much cheaper.
I think that's one of the reasons I got the house for such a cheap price was because people didn't want to have to deal with that. It was, and actually it was heating oil and propane.
Yeah.
So it was a combination of, getting two different utility services to bring the heating. Luckily, because the town had come and put the utilities in at the road, I actually had it all converted to natural gas, changed out the furnace system and everything like that. So when I went to resell the house, the potential buyers were like, oh, it has natural gas. This is what we're used to. Like every other house on the street had natural gas. And that's actually, it helped me like increase the value of the house. Yeah.
So maybe that's actually a great point, is to look for the houses that have these deficiencies in them. And if you can get it for the right price or a lower price, and you can spend the money to get it fixed to the way that's common in the area, you can actually make some money off of it. Well, thank you guys so much for joining us for our little breakdown on market analysis. For everything you need to look at when determining a market, make sure you go to biggerpockets.com/rookie resource. And I've created a template for you guys so that you can take your neighborhoods that you're looking at and you can go ahead and write down the data that you're finding for all of these different criterias of things you should be looking at. And you can go ahead and compare the different neighborhoods. And remember, just because a neighborhood like Williamsville is great for Riley doesn't mean it's great for me. We have different strategies. We have different goals and whys in place as to why we are investing. Thank you guys for joining me. Don't forget to check out the Real Estate Rookie YouTube channel. And Riley, thank you so much for joining me.
Thank you.
Yep. We'll see you guys next time.